Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This simply stocks, and in this video today, I'm going to talk about a summer play, another stock that has gone down over the last 2 weeks or so, but looks attractive at these levels to buy from a 6 month perspective as well as from a 2 year perspective. So we'll discuss about targets both on the 6 months time frame and 2 years time frame as to where I see the stock headed. And this is a prominent brand in the AC space that I'm going to talk about. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. I'm not a member of the NSE and BSE, so I'm not officially certified to give advice on portfolios, etc. So kindly take that on note. Whatever I discussed in videos is purely for educational purposes, and in most cases none of my positions are in these stocks. If there are positions, I do mention that during the videos or live sessions. So that's a call. This is purely for educational purposes and entertainment purposes, so that you have an idea on particular stocks and companies as to how they are doing, and then you can take the decision finally, and you are pretty open to take the decision finally as to which stocks you want to go with and which stocks you don't want to go with. So before I talk about Voltas, which is the AC company that I'm going to talk about today, a small request: kindly support me on Patreon. Once you do that, help me grow the channel. Help you also ask me questions and eke out answers in greater detail. Once you get a $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you cannot pay on Patreon, you can take the YouTube membership, or you can take the yearly WhatsApp membership if you email me. Now let me take you to the screener website. So this is the company I'm going to talk about. It is Voltas, as I mentioned. Now it is trading at around 810 rupees, and the market cap of the company is around 26,000 crores or so. And now this company did not do well for the last few quarters, and we'll discuss about the numbers in a bit. And that's why the stock has fallen from all the way from 1350 to these levels of 800, 810. It made a 52-week low of 740 few months back, but now it has been in a consolidation mode and has fallen over the last, you can say, 2 weeks, from levels of around 870, 860, 870 to these levels. So let's just discuss a little bit about the company, and then we are going to discuss about the numbers itself, and then we will go towards what could be the targets from a 3 4 months point of view and 2 years point of view. So it is engaged in the business of air conditioning, refrigeration, electromechanical projects as an EPC contractor, both in domestic and international markets, in the Middle East, Singapore, etc., and engineering product services for mining, water management, and you can say water management and treatment in these spaces. So that's about the company. Basically, they are into engineering as well as commercial ACs and domestic AC firm. It is one of the largest in the white goods space. So its first segment is unitary cooling products, which is around 36% of their revenues. And these products are comprised of air conditioner, air coolers, and commercial refrigerators. They have huge refrigerators, just like Blue Star, which is one of their competitors that they produce. As of July 21, Voltas is number two in the air conditioning category with a market share of around 10.8%, which is quite significant. So, and over the last 2 quarters, what the management has mentioned is that their market share has kept on increasing. So it must be around 11% by now. It is number one with 26.8% market share in room air conditioning business, which is quite significant in such a competitive market. They have a market share of around 27%, 26.8%, with so many, you can say, local brands, so many international brands that are in there. To have one fourth of the market, more than one fourth of the market, is tremendous. 22% market share in the inverter air conditioning business is also pretty significant for the company. In terms of expansion, the company also invested in expanding its manufacturing facilities to increase indigenous production and to reduce the customs duty impact on the consumers. A state-of-the-art R&D facility is also opened in future ready at the moment. The second segment is engineering projects, which accounts for 58% of the total revenue. So basically, we as retail investors might be understanding that Voltas is purely an AC company, but 60%, nearly 60% of the business is mainly engineering projects, which are domestic and international in nature at the moment, with expanding, you can say, engineering projects at the moment, and they are getting these projects a big time. In terms of expansion, the HVAC product business enhances its manufacturing capacity with the launch of a state-of-the-art commercial products manufacturing facility in Vagodia, Gujarat is where they are beginning. The third segment is around 5% of their total revenue, which is engineering products. And this comprises of textile machinery and mining, and you can say contract construction equipment that they sell. Here they don't means have huge, you can say, market share in the construction business, but in the spinning machine segment they have around 55% market share. So if the textile industry come back into focus, I think Voltas again will start to do well during that period. So the spinning division has 55% of the market share uh, at the moment. Very low dependencies on imports because some of the products they make indigenous. So for ACs and other kinds of machinery, the raw material, you can say parts are made here in India or procured from India. So that's also pretty good at the moment. The distribution network is pretty vast. Expansion program going on currently in the distribution channels, and 180 distribution networks at the moment. EBOs are there. Company is also setting up, you can say, exclusive outlets that will act as you can say, experience zone, providing a hands-on experience for the complete range of products that Voltas currently has. There have been new product launches that the company is doing consistently, and over the last 1 year they have done that. So in terms of, you can say, the business per se, the company is doing extremely well, and they are trying their best to expand into the market. And basically, this was one of the biggest reasons as to why the numbers were not that great. So if we look at the quarterly numbers over the last 2 3 quarters, the numbers on the bottom line have not been significantly good, and that is why you can say the stock has not performed that well. So if you look at June 22, they had around 2670 crores of sales versus 1790 crores in June of 21. They had margins of around 9% versus 6%, which is pretty good. And that's where the stock went to 1350, 1380 before that in April and May. In terms of, you can say, operating profits, it was around 230 crores versus 105 crores during the pandemic. So things were looking pretty good here. But this was March 22. In June, things started to fall a little bit. So we expected that from March to June, the numbers are going to go up significantly, but that was not to be. And in June, we had around 2700, 2760 crores of sales, which was pretty similar, but margins dipped from 9% margins dipped to 5, and this was the really sore part of the number, and that is why the stock fell sharply. 146 crores of, you can say, operating profit with margins of 5%, versus even in the pandemic year they had margins of around 6%. So in June 21, you see that the margins were around 6%. Now basically what has been happening since March onwards, over the last 1 year or so, March 22 till now, they have been expanding big time on all their divisions. And so probably that is the reason why the margins have dipped. Probably that is the reason why they were not able to focus more on the current business or whatever they were having at the moment. So hopefully when these expansions come on stream, the numbers will look totally different. So if you look at September, it was 1770 crores versus 1690 crores, so not a significant jump at all. And that is why I believe that the stock never performed after June, July. So what happened was in September 20, during the extreme pandemic time, they had margins of 6% and profits of 91 crores, whereas in September 22, they ended up with, you can say, operating profit of 72 crores with margins of around 4% versus 6% in September 20th. So what was happening was the margins were shrinking continuously, and eventually in December, the current quarter, they have had, or the last quarter when the numbers came in, they have had margins dip to nearly 2%. So basically what has gone on here is that the numbers have not been that great. Let me take you back to Voltas. So as I said, December 22, they had sales of 2000 crores versus 1800 crores. So just a 10% jump in sales over December of 21, which wasn't the best of the quarter because of the pandemic, and still they did 1800 crores. So this time around again sales dipped, and eventually the company came out with only margins of 2%. So what I believe here is we can play a contrarian buying thing here, because the margins have dipped to such abysmal levels of 2%, is that now I don't see that the margins going down further. In fact, management commentary has been of such note. So I believe that margins are going to pick up only from here on in, from March onwards, as more streams, or you can say more revenue streams open up with the expanded capacity, and hopefully next year these margins should, by December and March of 24, should come back to 6-7% from 2%. So that is my expectation. That is why numbers are going to become better. If we look at the balance sheet, debt has remained stable around 390 400 crores of borrowings is there. But if you look at the reserves here from March 17 at around 3200 crores. In fact, if we go all the way to March 14, from around 1800 crores, it has gone to 5500 crores. 3x over the last 8 years is what has happened, and it's growing even further. So that is pretty positive for the company. If we look further on the ratios part, the debtor days, that has gone up slightly but has remained stable at between 90 to 100 days. If you look at inventory days, that has gone up as well. So that means they have inventory on board at the moment. But I think March 22, these are numbers till March 22. So hopefully by this year, March 23, the inventory was there because of the pandemic. So you have to take into account that thing as well. I think when the yearly numbers come out for March 23, I think the inventory numbers should be significantly lower. In terms of shareholding pattern, FIIs have taken money off of major stocks, and nothing changes here in Voltas from 26.2% in March of 22 till December 22. It has dipped to around 21.6%. But what is interesting in here is that from 27.8%, DIIs have increased their holding by 3.5%, more than that, to 31.5% at the moment. So that is where the belief is that the numbers are going to pick up from here on in, and these are good levels to get into. And once, you can say, FII selling stops, things improve. I think these are the stocks where FII buying is going to be big time. So from a 2 year point of view, the stock looks pretty good to buy. From a 6 months point of view as well, if I look at on the charts, then it went to around 900 levels recently. So it went to around 900 in early part of this month, and from 920 it has dipped by 100 rupees, more than 100 rupees. So 12% dip over the last 1 month is what Voltas has seen. And now I believe is the right time to get into. From a 3 months point of view, from these levels of 800 810, I will not be surprised if we end up seeing levels of 1000 on the stock from 3 4 months point of view. So a good 20-25% upside is possible. 980 to 1000 is a possibility till about July or so. So this is a 4 5 months time frame. You can buy at 810, target of 1000 or 980, and a stop loss of 770. So here your stop loss is 770, and your target is 982,000. From a 2 year perspective, I think it can easily generate 35-40% upside. So I think 1100 is a possibility from a 2 year perspective. Once it reaches 1000, then there could be a slight decline and momentum shift towards the downside. But I think from 2 years point of view, 1100 to, so 1150 to 1200 even is possible from a 2 year point of view. So that is Voltas for you. So this was a video on one of the summer picks this season. Please like and subscribe and channel, hit the bell icon so you can get my video straight away when I post it, and kindly support me on Patreon. Thanks a lot.